Thank you, Shah. Good morning, everyone. This is Mary Lou Halverson, President of the New Jersey Restaurant and Hospitality Association. And first, let me wish everybody a happy and healthy new year. And thank you for joining us for the webinar today, which I'm sure is extremely important to many of you regarding the second round of funding in PPP. And I'm pleased to have Bob Gilbert from Citrin Cooperman joining us today. Bob is an instrumental strategic partner with the association and has been a huge help to the association and its members through the pandemic and navigating the last round of PPP and EIDL loans and SBA and all the questions that you have. And he's here today to help us answer some new questions. And but before I turn it over to Bob, I just wanted to give you a quick update and for something for you to look for in your mail later this afternoon. Earlier this week, Governor Murphy vetoed Assembly Bill 2545, which would have allowed for the continuation of outdoor dining. And it would have given our restaurants some permanency and some predictability for planning, because as we know, a lot of the EOs they're expiring of what they're allowing with expansion of liquor licenses on March 31st. So even though that this bill has passed or did pass both houses unanimously, the governor vetoed it for what seemed to be honestly some silly reasons. We have been working with both the governor's office, Senator Sarlo, Senator Gopal, Assemblyman Freeman, on having this bill with one small change that the governor's office requested, which made sense. Just about authority over liquor license issues should really remain with the ABC. And that bill will be reintroduced today. And pretty much the way it was, we are going to push for a floor vote on Monday and immediate signing of that bill. We are asking that for you to please contact your legislator and the governor's office to immediately pass and sign this bill. We expect that because the previous bill was passed unanimously, that there really will not be any kind of sticking points with this. So it should, but they really do need to hear from the industry of why this is so critical. And it's critical for a couple reasons. One being that it allows you to plan, because this will allow for your outdoor dining and expansion to continue until December 1st of 2022. So you'll be able to make long range plans on tenting and just how you operate. It will allow for more employees. It will allow for you to recoup some of that lost revenue that you had as you can increase your capacity. So there will be an action alert sent out, like I said, later this afternoon once we get the bill number. And for those of you that are familiar with our phone to action, it's very easy. It's a click, click, click. You can modify the letter, but we have it pre-written for you, so it should be, real easy for you just to send off. So that's pretty much it. And I do apologize. I'm driving right now, so I didn't think it was really smart to be on camera. But again, I wish all of you a very happy and healthy new year. Just know that we're here for you, and we'll continue to update as we know as things change. I know some people really quickly, too, have asked me about the Restaurant Act, which was an agenda, very much a part of the Democratic, Chuck Schumer and them, and the agenda for the Democrats. And so we are going to be pushing for that on the federal level, that we have this bill, but hopefully now we can get the Restaurant Act bill passed. So that will be on our federal legislative agenda. So I want to thank you again. And Bob, I'm going to turn it over to you, and thank you for all that you do for the association.
Okay, thank you. So welcome everyone. So we wanted to provide the association members with really what they need to know of this 5,600 page document that was released right before the end of the year. Just moving through the slides, there's a picture of me, that's nice, okay. So a little bit of background, the Consolidated Appropriations Act was signed December 27, 2020. Both sides went back and forth for probably 9 months on on trying to, release what I guess would be stimulus number two. And in doing that, there was so much added to this bill where everyone just wanted something out of it, and it became the largest bill ever at 5,600 pages. A lot of that is irrelevant to most of this group. For the purposes of this discussion, we're just going to focus on the general small business provisions. Interim final rules on PPP changes were issued on Wednesday night, so I saw them yesterday. So I spent a good chunk of yesterday going through 120 pages worth of new rules that nothing was really earth-shattering, which is a good thing, but just understand that those rules are included in this discussion topic. One of the things I wanted to mention is that this webinar will not be discussing things that are potentially relevant to some of you. So I'm not going to talk about pandemic unemployment insurance, the direct cash payments, $600 that a lot of people talk about, assistance to low-income communities. That's where new EIDL money comes into play, extension of FFCRA tax credits, and expansion of several other income tax provisions related to development, energy, and employment. So understand that there's a lot in this law that it's just too much to cover in a 1 hour webinar. But if you need to do your homework, then understand what else might apply. What we will be discussing is deductibility of PPP costs used for forgiveness, modifications to round 1 PPP, the second draw for PPP, round 2, grants for shuttered venue operators, which is a new program, extension of the traditional SBA relief. For those of you who know, this was a 6-month SBA subsidy where SBA was paying existing loans for 6 months. And these last two, changes to ERTC eligibility and extensions and modifications to ERTC. This program never got enough love, and I still don't think it's getting enough love. Pay attention to these last two, to the items on ERTC. There's big dollars at play, and it's now opened up to a much bigger crowd. Okay, so deductibility of PPP. I don't know if everyone even knew that the Treasury figured out kind of a back-end way to tax the PPP receipt. I think a lot of people thought it was tax-free, and then what the Treasury did is they said, well, you don't have to pay tax on the receipt, but you can't deduct the expenses used to get forgiveness, which gets you to taxability on receipt. Congress clarified their original intent 2 weeks ago, saying that no, that there's no disallowance of deduction and there's no taxability on receipt. It's tax-free. So for people that got significant PPP loans, that's big dollars. I don't know if people had projections being prepared for them over the last couple of months, but they might have saw that there was a big switch from PPP being taxable versus not taxable. So no taxability on that. Also, the EIDL advances are no longer taxable. That was the up to $10,000 that some people got for after applying for an EIDL loan. SBA subsidy payments, so the 6-month SBA payments on traditional SBA loans that the SBA was making on borrowers' behalf, that is no longer taxable. Grants for shuttered venue operators, which we will discuss, will not be taxable. And kind of a random but probably helpful provision thrown into the tax provisions is businesses can deduct 100% of meals when provided by a restaurant for 2021 and 2022. So there's a limited opportunity where businesses can get what's called a 3 martini lunch. They can get a full deduction for working lunches. So potentially this incentivizes businesses to eat out a little bit more, which could be helpful. All right, modifications PPP round 1. So, and even if you already, even if you are already comfortable that you're getting full forgiveness, you should still pay attention and understand these additional expenses because they apply to round 2 as well. So, I mean, these were all written in the form of amendments to existing law. And then from there, there's what carries on to round two. But first, we'll talk about the amendments that go back. So simplified forgiveness application, loans of $150,000 or less will have a one-pager, just stating number of employees, estimated amount spent on payroll, total loan value, and an attestation that you complied with the program. So you'll still want to do your homework and make sure that the numbers add up, and you'll want to retain records for at least 4 years because the SBA can review any of these applications. But $150,000 or less, the application is one page, and yeah, that's that. Additional eligible non-pay, and by the way, as I'm going through all these, please jot down your questions. I'll get through as many as I can at the end, and even after that, you guys are welcome to reach out to me with more questions, and happy to talk offline. Eligible non-payroll expenses. So additional items are included in that 40%, the 60-40 allocation of payroll versus non-payroll is still in play, but if you didn't have enough rent, utilities, or mortgage interest, there's other items that are now in play. One of them being covered operations expenditure. So payment for any software or cloud service that facilitates business operations, product delivery, processing payment, or tracking payroll, HR, sales, billing, or accounting. There's a lot of activities included in that, but the first couple words is software or cloud service. So, I'm thinking about payroll processing or credit card processing. Based on these tasks, it does seem that those would be fitting, but are those services really software or cloud services? I'm not sure. But this is the definition we have at this point. That the rules didn't clarify it. I'm thinking an FAQ might, give an example of just, those two items are relevant to almost every business. So I'm thinking we'll get a little bit more clarity on that. But that's what a covered operations expenditure is defined as. Covered property damage costs. So any costs related to vandalism or looting. That occurred during 2020 that was not covered by insurance is now eligible. Covered supplier costs. So this is specifically big for the restaurant industry. Payment for supply of goods that are essential to operation pursuant to a contract or purchase order in effect at any time before the covered period. So that first provision tells me, okay, if I have a purchase order outstanding, or in my mind, an invoice really. So any accounts payable for goods that are essential to operations that I'm paying for during my covered period, then those would now be eligible. So pretty much everything in accounts payable when you apply for the loan that's essential to the goods that are essential to the operation would be an eligible cost. For perishable goods, the order can be effected before or at any time during the covered period. What that means is it's not accounts payable, when you get the loan, it's all of your food costs. I take that as all of your food costs throughout the covered period, unless it's non-perishable canned goods. All perishable food that you purchase during your covered period is now a covered supplier cost. So yeah, between that and rent, you're probably going to be at that 40% pretty easily. So definitely have an understanding of that. Covered worker protection expenditure. This is another newly eligible cost. So anything to facilitate the adaptation of the business activities of an entity to comply with requirements established or guidance issued by the government. So this is kind of a vague topic, but it does include capital expenditures. People are asking me, what about the tent setup and the patio and all that stuff? It includes capital expenditures. Examples that they included in the law itself was purchase to create a drive-through window facility, filtration systems, physical barriers, expansion of indoor, outdoor, or combined space, healthcare screening, or other assets related to compliance with health and safety standards and guidance. There's other examples. A lot of them are pretty vague, which is usually a good thing, allowing for more flexibility. So, any of the adaptive costs you had to undergo to comply with either outdoor dining or 25% or the sneeze guards, like things like that, that's now a covered worker protection expenditure. And the rent, utilities, mortgage interest still in play as non-payroll costs. These amendments are not applicable to borrowers that already received their forgiveness from the SBA, so that's done with. But the amendments appear to be applicable to borrowers that applied, but the SBA has not yet remitted the forgiveness payment yet. So I guess if your application is still in limbo at this point, I'm not sure if if it changes anything, then perhaps either the lender or the SBA reaches out to you and says, okay, do you need to adjust for newly eligible costs or anything like that? Okay, second round of PPP. So eligibility need to be operating on February 15, 2020, employ 300 people or less, and incurred a 25% or more reduction in gross receipts in any quarter when compared to the same quarter in 2019. I thought that was interesting because, when I thought 25%, I thought for the year or, a combination of a certain period, but any quarter from 2020 to 2019, Q2 kind of happened to be like, March 16th to June 15th, I think it was. A lot of businesses were on complete lockdown, especially restaurants. So I think it's pretty easy to just take Q2 alone and say, okay, that quarter we were definitely down 25%. If you have to look at other quarters, go ahead. If you did it for the whole year, the bank would accept that as well, just because that means that there had to have been one quarter that was down. But yeah, it's really any quarter from 2020 to 2019, even if you had some good quarter, a good Q3. You will need to substantiate the decrease in gross receipts. So quarterly sales tax returns should do the trick. If your loan is under 150,000, then for whatever reason, that support needs to be provided on the forgiveness application, but not on the borrower application. So you still need to substantiate. It's just a timing difference for loans below 150 grand. And the new loan application will be Form 2483 SD. So just in case you don't know what application you're going to be filling out, the second draw is going to be 2483 SD. If not in business during the measurement periods, there are accommodations, meaning, if you weren't in business during 2019, but you were in operation at 2/15/20, then you can compare a reduction from Q1 2020 to the following quarters of 2020 to demonstrate that 25% reduction. Eligibility also excludes entities that received shuttered venue operator grants. Again, we'll talk about that and you'll see why it would exclude them. Must have used or will use the full amount of an initial PPP loan before being eligible for second draw. So it's unclear what will use means. I do have clients that they've been completely shut down. It just never made sense for them to open. They're kind of still sitting with some or a lot of PPP money. So to me, they have to spend that on eligible costs. And maybe they did spend it on eligible costs. It just wasn't eligible until now. But either way, that money has to have been spent on eligible costs before the second draw disbursement is made. I think that the term will use means the period between applying, like you're going to certify that I will spend the full amount of PPP money before receiving this disbursement. We'll have to see exactly what the certification says on that, but that's my take. And if that's the case, then and you need to spend more money, you kind of have to figure out, all right, what's the best, what's my best, if I have to get rid of this money to get a second draw loan and to kind of, keep my runway going. Should I spend it on worker protection expenditures, supplier costs, rent? I mean, now you have a longer list of items to choose on how to spend that money on what's now considered eligible. Similar to round one, you have to certify that current economic uncertainty makes the loan necessary to support its ongoing operations. And the covered period can actually be anytime in between 8 and 24 weeks after origination. In round one, it was 8 or 24 weeks. Now it's really anything in between. Presumably Form 3509 for loans over $2 million will be necessary for round two. And that's the, certifying current economic uncertainty. That's a form where you kind of take a retroactive perspective to say, or a hindsight perspective to say, all right, we were, this was our revenues throughout the covered period. This was our net income, and kind of tells the government, it's a questionnaire, tells the government really how much you needed that loan. I haven't seen any action on that yet. The form wasn't released until, form wasn't finalized until December for round one. So, but just understand that loans over 2 million will probably require a questionnaire for certain, whether or not the loan is necessary. Maximum loan amount. So it's generally 2.5 months of average monthly payroll, either using 2019, 2020, or preceding 12 months. It includes calculations for seasonal employees similar to CARES Act. It includes calculations for entities that did not exist 1 year preceding 2/15/2020. And the highlight is hospitality industry. Businesses with NAICS codes starting in 7.2 get 3.5 times average payroll, still capped at $2 million. I'm sorry, I'm not sure if I mentioned, but all the loans are capped at 2 million. They were capped at 10 million for round one. They're capped at 2 million now. So just to do some quick math, for restaurants or anyone in NAICS code starting with 7.2, you're going to get 40% more in this round. So if you got 100K in round one, you could receive 140K in round two. If you're using the same lender, you apparently do not have to, if you're using the same lender and you want to use the same, let's say you used 2019's payroll to get to your average, you don't have to provide that payroll information again. The lender already has it. They already got comfortable with it. And instead of doing 2.5 times the average, they'll do 3.5. But yeah, understand that that's a win for the industry, that bump. Other notes, so affiliation rules waived for NAICS code starting with 7.2, where employee count is per physical location. It was 500 per physical location. Now it's 300 per physical location. So I still think that's a big help. It would have to be a pretty big restaurant to have 300 employees. I'm sure there are some on this call, but for the most part, that's still helpful for multi-unit groups. Eligible costs for forgiveness include additional costs explained in earlier slides. So that covered supplier, that worker protection stuff, that's all in play in round two. Loans are available through March 31st, 2021. And loan maturity is 5 years at 1%, similar to, or same as what they were in the Flexibility Act. All right, grants for shuttered venue operators. I'm really just going to scratch the surface on this because I'm not sure. One, we don't have regulations on it yet. I thought we were supposed to get them. I thought they were supposed to be issued yesterday, but I haven't seen them. So I'm going to discuss the legislation itself, my thoughts on it, and kind of what to think about or look out for. So a live venue operator, promoter, theatrical producer, performing arts organization, museum operator, movie theater, talent rep, are all the types of venues that should be eligible for this. For this group, I'm thinking live venue operator, what comes into that definition. And there's many requirements, but two of the big ones is 70% of earned revenues generated through a live event, cover charge, production fee, or sale of event food, beverage, and merchandise, or generally offers event tickets over 60 days in advance of the event. So, comedy clubs are specifically mentioned to be included in something like this. I don't think there's going to be an issue with that. But I'm thinking, I've had some conversations on nightclubs, and where I get hung up is the requirement to have a defined performance and audience space. And, I'm thinking, does a DJ platform that overlooks a dance floor count as a defined audience and performance space? If so, then every night is a performance event, and that allows the food and beverage from those events to demonstrate the 70% requirement. But I'm not sure if a nightclub, and by the way, they would have to charge a cover charge as well to be included in that. If you don't charge a cover charge, then that eliminates you as well. So a nightclub charges a cover charge, has live performance, whether it be DJ or band. The defined audience space is where I'm a little hung up on that. It excludes performance of prurient sexual nature. So my assumption is that gentlemen's clubs were specifically ruled out of this. Now that we talked about who may be eligible, the grant is 45% of the venue operator's 2019 revenues, capped at 10 million in the first round of grants. So it's essentially 6 months worth of revenue, 2019 revenue. If as of 4/1/2021, the revenues are no more than 30% of Q1 2019, meaning Q1 2021's revenues are 30% or less of Q1 2019, then a supplemental grant will be awarded at 50% of the initial grant. So, the way I understand this is you can get 10 million in the first round max, and another 5 million in the second round if you're eligible, or 45%. The 10 million is the cap. General requirements have to be in business February 2019, 2020, and show a revenue decline of at least 25%, which is probably most venue operators, even if they were operating at a somewhat lower capacity. Importantly, there's a priority in how these funds are distributed. The first priority is going to go to venues that had a 90% reduction in revenues. I believe the dates are April 1st, 2020 to 12/31/2020 compared to that same period in 2019. And then the second tranche is for those that had a 70% reduction, same period. And after that, it's 14 days of those two tranches. So the first 14 days goes to these guys, the 90% or more. Second 14 days is to the 70% or more, and then it opens up to everyone that had a 25% reduction. And there's also some funds pulled aside for small businesses, I think less than 50 full-time employees, and there should be enough. The idea is enough money to be around for even the little guys. Oops. Again, not going to go into any more detail than that, just because we don't have regulations. But if you have cover charges or sell tickets or something like that, something to keep our eye on. Extension of traditional SBA debt relief. This is, some of you probably already participated in it, but if you had an existing SBA loan or if you originated one during 2020, the SBA covered 6 months worth of principal and interest payments. That program is being extended another 3 months starting February of 2021. It's being capped at $9,000 per borrower per month. And an additional 5 months payments will be made for borrowers in certain industries, restaurant accommodation being one of them. So restaurants and accommodation industry entities can get up to 8 months worth of SBA payments. And this has nothing to do with PPP. This is traditional SBA debt that was taken on. Can get up to 8 months worth of P&I on these loans. All right, ERTC. So you're going to hear me specifically mention 2020 and 2021 because same program, but different rules. And 2020, they both open up to a lot more entities now. 2021 specifically opens up to even more. So the headline is PPP recipients now eligible for ERTC. So back in April and May, I was not in love, even into June, beginning of June. I was not in love with PPP program. My clients were closed, so they weren't going to spend the money. Like they were just going to take the money, spend it for people to stay home, and yeah, they would have some rent covered, but it wasn't a very helpful program. ERTC it could be extended through the end of the year, and it was when putting pen to paper, it was a more advantageous program for a closed restaurant when the PPP covered period was only that 8 weeks. Once the Flexibility Act came out, that kind of changed everything, and PPP became the more advantageous program. Now, the new law strikes the section of the CARES Act that disallowed PPP recipients from being eligible for the credit. So, and the amendment takes effect going back to the CARES Act. So that tells me that the PPP borrowers should now be eligible for ERTC going back to March 12, 2020. The caveat is you can't apply both programs to the same wages. So we're going to talk about how to come up with the credit, but just to show a very simple example and give you guys an idea of what kind of dollars we're talking about. If I received a $100,000 PPP loan and I spent $150,000 on payroll and $50,000 on non-payroll costs, I would apply $60,000 of my wages of the $150,000 that I spent for PPP forgiveness. I'd have the 60 of wages and I'd have 40 of non-payroll costs, even though I spent 50. And that would get me my $100,000 of full PPP forgiveness. And that would leave $90,000 eligible for ERTC credits, which is the $150 I paid on payroll and $60 I used for PPP forgiveness. So $90,000 eligible for ERTC would result in as much as $45,000 of ERTC credits that are now available to me. So this isn't, $100,000 PPP loan is not a big loan, and $150,000 worth of wages is not significant when you're talking about, several months. So in this small example, $45,000 could be made available. So hopefully that gets your attention, and then we'll talk about the qualifications and eligibility. The mechanics of retroactively going back to get this money are currently very unclear. At this point, I have no idea. I would think that I would file an amended payroll tax return, but it doesn't appear to be that simple. I will say that I personally am not applying for any PPP forgiveness right now until I get more clarity on this. I don't want to apply for too much wages on PPP so I can preserve more for ERTC credits. In this example, if I applied for, if I just used $100,000 of wages because that was simple for me to say, okay, $100,000 loan, $100,000 worth of wages, I clearly spent. I'm going to take out more I'm going to use more PPP forgiveness for wages than I need to, and I'm no longer going to have those wages available for ERTC. So until I know this better, I'm kind of putting a pause on PPP forgiveness applications right now. Refresher on ERTC computation. So it's based on wages paid from March 12th to 12/31 when either fully or partially shut down by government order. And with that, I think probably everyone on this call is already included in that since March. I think the continuous restriction should qualify all New Jersey restaurants as partially shut down just given we're not fully operational. So I would say we're partially shut down. Or if I'm wrong in that assessment, experiencing large drop in gross year-over-year receipts. So at any quarter where we had a 50% drop as compared to that same quarter in 2019, once that happens, we are in an eligible quarter. Every quarter is an eligible quarter until there's a quarter where we're at 80% when compared to 2019. So even in that category, if Q2 was Q2, you were below 50% because you were mostly shut down, then that means you're eligible for Q2 and Q3. If Q3 you had 80%, then you're done being eligible there, unless in Q4 you went back down to 50%, or if this partial shutdown applies. Again, I think the partial shutdown applies, so most of the people on this call should be eligible going back to March to date, really. 2020 credits are equal to 50% of the qualified wages paid to an employee, capped at $10,000 of wages per employee. So your limit is $5,000 per employee, and that's where I came up with $90,000 worth of wages in my example, got us to a $45,000 ERTC credit. You can increase those wages for amounts paid, allocable health insurance or healthcare costs paid for employees. So, and even in situations where you had to furlough someone, but you continued to pay their healthcare, you can claim the credit against those healthcare costs, even if they weren't technically an employee at that moment when you were paying that for them. For 2020, and this is what's going to rule some people out for 2020 going back to a certain extent. If you had more than 100 FTEs, then only wages paid to an employee during an eligible quarter to not provide services are eligible for the credit. So, I had businesses where they continued to pay everyone through the end of March, even though they were fully closed. Those are definitely qualified. I had people that paid everyone's health insurance for another month or 2 months. That would qualify. There are also examples where you might have a district manager, but and they're still on payroll, and they're still doing some administrative stuff, but the 90% of what they normally do is irrelevant for a certain period. There's IRS examples where, in that case, 90% of the wages paid to them would qualify for the credit. So just kind of think about, what was happening in March and April, and even now. I mean, you could be paying people that either aren't working or are working at a much lesser capacity, whether or not they qualify. If you had less than 100 FTEs, then all wages paid to an employee during an eligible quarter qualify for the credit. So there's no issue with whether or not you sent them home or they were furloughed or anything like that. Even working wages are included in the credit, which is pretty huge. Now for even better news. So the program's extended through June 30th, 2021. For 2021, there's an amendment that increases the percentage from 50% to 70%. And for 2021, there's an amendment that increases the maximum qualified wages to $10,000 per quarter, as opposed to $10,000 for all of 2020. So to put this in perspective, there's an employee that makes $10,000 every quarter. In Q3 and Q4 of 2020, the maximum credit would be $5,000. It's 50% of the $10,000 in wages that they were capped out at, even though they really made $20,000 in wages. In 2021, however, if that employee made $10,000 a quarter, the resulting credit would be $14,000, which is 70% of $10,000 of wages for each quarter. So just one employee can be $14,000 worth of credits. If you have 10 employees, it's $140,000. I mean, do the math on how many employees you have, and it's not like full-time equivalents. If you have high turnover and a lot of part-time employees, I mean, it can really rack up 70% of what you pay them, including their healthcare costs. Even better news, well, before I get to the better news, the threshold goes up to 80%. So before I talked about a 50% reduction to get you into eligibility. Now it's 80%. Not sure that's going to matter if we're all still partially shut down. And for that, there's accommodations in place for businesses that didn't exist during specific quarters in 2019. But for 2021, the amendment increases the threshold number of employees before a change in treatment from 100 FTEs to 500 FTEs. So if what I was just talking about for 2020 didn't really help you much because you have more than 100 FTEs, if you have less than 500 FTEs, then all of this applies to you for 2021. So, and I mean, 500 FTEs, that's a pretty big operation. So I'm thinking a lot of the businesses on this call are going to be eligible for ERTC credits on top of PPP forgiveness, just not on the same wages. And the game I would play, well, the game I'm discussing here is ERTC expires July 1st, 2021. So, I'm sorry, what year? Yeah, July 1st, 2021. If I was to get the best bang of both programs, the longer I wait to get my PPP money and start that covered period, the more I can take advantage of ERTC credits first and then use PPP forgiveness. So think about a situation where you wait, you get your money at the end of March for PPP. You could, in theory, apply ERTC credits to all wages paid for the next 6 months maybe, and then use July, August, and September, because if you got your money at the end of March, you got 24 weeks of covered period, which is going to put you to September for a PPP covered period. You could, in theory, get 6 months worth of ERTC credits and get full forgiveness by paying 3 months worth of payroll to get to your 60% requirement in the summer, which is probably going to be busier for a lot of this group. So I don't want to tell everyone wait until the end of March to apply for PPP, because there's always a risk that the funds do go dry and you miss the boat because you listen to me. But I will tell you that an SBA director once mentioned to me that the United States has never let a disaster relief fund go dry. It's always been replenished. So again, I'm not telling everyone to wait as long as they can to receive PPP money so that they can get the best, take advantage of both of these programs the most. But it is a strategy that is in play if you wanted to, if you were tolerant to that risk of PPP running out. So I hope that what I mentioned on the ERTC specifically was somewhat eye-opening to this group. I don't think, like I said in the beginning, I don't think the program gets enough love. I don't think it's being publicized. I think PPP gets all the headlines for whatever reason. But hopefully this was informative to you, and I'm happy to answer any questions over the next 14 minutes.
We have plenty of questions, Bob. I'm going to start with one of the last ones because it's fresh on your mind. What is the mechanism to apply for the ERTC?
Yep.
Is there a line on your quarterly form 941 to claim the credit, or is there a separate form? Also,
there is a line on the 941 to claim the credit. Again, I don't know how to retroactively claim it. I as of right now, I don't think it's as easy as filing an amended 941 to going back to 2020. I don't even think, well, yeah, I'm not sure how to retroactively claim it, but I can tell you that the IRS will have, does and will have line items on the quarterly 941 to apply the credit.
okay, so
And it's fully refundable. So it's not like, only against the payroll taxes you paid. It's a fully refundable credit. So you would get money back from the IRS. You would get more than what you paid into the IRS.
How is FTE calculated?
30 hours or more, average.
Okay. And I'm going to go back to the top and start answering. Oh, does everything here apply to New York City restaurants as well, not just New Jersey?
Everything that I just, outside of, some of the things that we talked about of what restrictions a New Jersey restaurant is dealing with, all of these programs are federal level. So yes, they do apply to New York City.
Okay. Can you confirm the period for any loan repayments? My understanding was it was 2 years, but language in IFR states a 5-year maturity.
Yeah. So everyone, the PPP loans are 5-year maturity now, but for those that received PPP money prior to, I want to say June 5th, they already signed agreements under the CARES Act maturity rules, which was 2 years. So it's up to you and your bank to change that loan to be a 2-year loan. And banks, for whatever reason, are giving borrowers a hard time with that.
Okay. There is a 4 million cap on loans from a single corporate group. Can we review and get clarity on what constitutes a single corporate group? Is it driven by common ownership versus having a holding company, etc.?
Yeah, please reach out to me directly on that. I need to go back and look at nothing changed in round 2 for that. It's the same definitions as it previously was, but I think my thought going back was that it needed to be like a corporate parent substructure, and common control may not have applied to that. But if that person can reach out to me directly, I'd be happy to discuss in more detail.
Okay. Yes, this presentation will be available shortly after we complete this. Next question. Are third-party delivery fees included in product delivery? So is my DoorDash, Uber fees, and what other delivery service costs?
I don't know. A lot of what that product is, I would say, is a cloud-based processing system. I'm not sure. I think some of these new eligible costs, we're going to need some I mean, like I mentioned, payroll processing, credit card processing, I think could apply, but I don't know. So yeah, that's for whatever reason, I hadn't thought about that one yet.
Okay. The next question actually was credit card processing fees. So you're saying it's possible. Okay.
Yeah, I'm thinking, the question is, yes, these tasks are being performed for these costs, but is it a software or cloud service? Like, I don't really like that phrase in the beginning of this explanation. It needs to be a software or cloud service that does blah, 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 blah. So, I don't know if those services qualify as softwares or cloud-based services.
Okay. Are the covered supplier costs available for the first round of PPP?
Yes. Everything that I listed for new eligible non-payroll costs goes back to round 1.
So the alcohol would qualify as well as a cost?
I don't know if alcohol's gonna, I don't know if there's a definition on what's perishable good. Well, actually, I'm pretty confident there's not a definition of it yet, but I probably wouldn't include alcohol unless I got more comfortable through an FAQ or something.
Do we know when the second round is going to be active?
No, the interim final rules came out yesterday, or Wednesday night, which gave the lenders, I'm assuming, the information that they needed to proceed. So, I mean, I would guess with the program expires March 31st. So if they're going to hand out, what is it, $284 billion, I'm assuming they're going to do it as quickly as possible. So maybe 2 weeks. I don't know.
Okay. Did you give out an ID number for the loan application? Or there's not one since it's not live?
The second draw is 2483 SD, I believe. Yeah, 2483 SD.
Okay. Next question. For seasonal businesses that received their PPP loan before Treasury indicated they could use any 12 weeks and therefore did not get the max amount they are eligible for, if they file for an adjustment, will that money be able to be applied retroactively to the same period they used to spend the first PPP loan?
I looked at that the other day, and honestly, because I wasn't thinking that I would have to answer that question, I stopped before getting to an explanation. I did see something that definitely the intent was for the covered period to be on the disbursement date. When there's 2 disbursement dates, I don't think that extends the covered period 24 weeks from that second disbursement. I think it just makes the funds available. So I'm going to kind of say with 70% confidence that the answer is no. But I would want to, be 100% sure of that before moving forward.
Okay. We're gonna come back to asking you that question, just so just so you know, we know this particular member very well. Can a seasonal business use a different 12-week period for calculations of headcount and payroll in their second PPP application?
Can you say that again?
Yes. Can a seasonal business use a different 12-week period for calculations of headcount and payroll in their second PPP application?
As compared to the first
Yeah.
round? Yes. Yeah, the second round, you can use 2020, 2019, or if it's seasonal, I guess any 12 months, 12 weeks.
Okay. Does payroll include tips?
Yes.
Do we think that catering halls could be considered a venue for the grant? Catering halls charge a cost per person to the client for their event.
I mean, I could say with confidence that the intent was not that. It was meant for, when you look at what a live venue operator is defined as, you need to have, a lighting rig and a PA system and soundboard. I mean, I would think that most catering halls won't qualify just from the physical requirements of I think there's a list of tasks that need to be provided by 1 or 2 people, whether it be a sound engineer, and there's a lot in there that takes it much more to something where there's a true live performance as opposed to a catering hall that, I guess somebody has I don't know, the catering hall doesn't pay the band usually, so I don't think it would qualify. But there might be circumstances. I just don't think so.
I don't know if you answered this in a different way. Are there the same seasonal payroll calculation options that were used in the first round?
Yes.
Can one apply for an R2 loan if fully repay the R1 loan, no forgiveness?
I don't see why not.
Okay, received IDA loan. I have not heard anything about repayment.
I guess on that though.
Oh, we're on the R1, right?
If you repay it, I think I definitely want to look into that more, but I think I'd rather spend some of it on eligible costs, have the loan terms, and then use round 2 to kind of keep my runway going. I'll have cash if I need to, get things going to repay that first loan. But the answer to the question was yes. I don't see why not. But I don't know. I would want to really look at what the next 6, 12, 18 months looks like before making that decision. Sorry.
Okay. Someone received the EIDL loan, but have not heard anything about repayment.
All of my clients that received an EIDL loan got something a few months later that said that $738 or something will start being withdrawn, I don't know, June 1st or something like that. So there should be there should be a notification that says what amount is going to start being repaid when.
Okay.
I don't know if they just got the EIDL loan and maybe it's in transit, but there is something that notifies them of the repayment terms and when it's going to start.
Okay. Next question. Our business opened in 2019. In regards to the PPP round 2 application, do I need receipts in all quarters, Q2, Q3, Q4, to qualify for the program?
You were open in all of 2019.
No, they didn't say. They just said they opened in 2019.
It's whatever quarter you have to show a reduction of 25% is going to get you there. Even if you weren't open in 2019, but you were open in Q1 2020, you could get there just by showing that Q2 was 25% less than Q1 of 2020. So I don't quite understand the question, but there's so much accommodation for stuff like that I'm thinking if you have a quarter that's 25% of a pre-COVID quarter, then you're good.
Okay. So I have a couple people letting us know, I guess while we were preparing for this, the U.S. Small Business Administration released today that they will reopen next week, January 11th, for new borrowers, for certain existing PPP borrowers to promote access to capital. Initially, it says PPP will be available next week.
That from the SBA. Now it's up to the
Yes.
lenders to open their portals.
Yeah. For forgiveness, some of them are a little slow. SBA loan forgiveness amounts, how to account for in books if they are to be reversed and not to be taxed. I'm going to read that again because I don't understand it myself. SBA loan forgiveness amounts, how to account for in books if they are to be reversed and not be taxed.
I mean, it's still for my clients, I would suggest like a below the line other income cancellation of debt type thing on your tax return. It's tax exempt income, so it's a book tax difference that similar to any non-deductible expenses someone might have, where it reduces the income but not the taxable income. This is just in the opposite direction. So it's on your books, it's other income, but on a tax return, it's a book tax difference, so you're not paying tax on it.
Okay. Next question, which appears to be the last one. Can you use 1099 consultants in the PPP application to get funds if you don't have payroll and have a seasonal business?
No.
Okay.
The idea there is 1099 workers can get their own PPP money using their self-employment income. So rather than you getting money to pay them, the idea is that they'll just get the money directly.
Okay. And our Denise Bexton, thank you very much. She said this is a great session.
Cool.
And that appears to be all questions. If anyone wants to type anything else, we have, we're over time, but it's okay.
Yeah.
Well,
so if
for
anyone,
me, it's okay. I can't speak for Bob. He's a very busy guy.
if anyone has, again, I feel like I'm going a little crazy with this ERTC thing. I'm kind of like, why isn't anyone else excited about it? because I'm not hearing much about it. I'm not reading much about it. And I don't think I'm misunderstanding. I mean, I read the legislation, I double checked myself. But if anyone has questions on that, and I can't even tell you like how to actually get the money, but in terms of, a lot of these businesses are probably saying, okay, what's the next 3, 6, 12 months look like? I'm thinking that there's some money available, some decent money available through this program. So,
Well, I can tell you why people are not excited, Bob. I don't think everybody read the 100-something pages that you've already read. They're still catching up. As always, it's a pleasure to have you. You're welcome back anytime, and you're just very full of knowledge and a great asset to the association and our members.
Yeah, happy to help, happy to be involved. Welcome the group to ask any questions. I will absolutely do my best to get back to everyone within a timely manner.
Yes. Oh, so one more, the people, I think with ERTC, people don't fully understand it.
Yeah.
Like I just need more explanation on ERTC, but this individual said they will reach out.
Okay.
Okay. Thank you.
All right.
Have a wonderful day.
Thanks, everyone. Take care.